Welcome to the Deep Dive. Today we're diving right into one of the toughest markets out there, semiconductor manufacturing.
Yeah, it's incredibly competitive, often called the Red Ocean, and for good reason.
Exactly. And what we're looking at is this really unexpected team-up, a huge long-term partnership between UMC, that's United Microelectronics Corporation, and Intel.
It's fascinating, isn't it? Because for UMC, this feels less like a play for massive growth and more about, well, survival.
Survival, that's a strong word.
But it fits. And for Intel, it's a really critical learning opportunity, even if it's an expensive one, on their path to becoming a serious foundry player.
Okay, so that's our mission for this deep dive. We want to unpack why these two seemingly different companies are joining forces. We'll get into the market pressures, this kind of secret weapon UMC has, and what it all means for chips, and for you trying to make sense of it all.
And that initial point you made is key. UMC isn't just chasing expansion here. They're trying to get out of what looks like a losing game.
A losing game. All right, let's start there. To really get why UMC is making this move, we need to understand the battlefield. Semiconductor manufacturing, it's basically split, right?
Right. You've got the absolute cutting edge, the advanced processes. Think below 10 nanometers. That's TSMC and Samsung territory.
That involves just huge R&D money, doesn't it? Billions for every new step.
Oh, absolutely. Tens of billions per node. Plus, they use that incredibly expensive EUV lithography equipment. It's what you need for the chips in the latest smartphones, or those big AI accelerators like NVIDIA's GB200. Super high-end stuff.
But UMC, historically, they haven't played at that bleeding edge. Their game has been mature processes.
Exactly. 28 nanometers and up. These aren't the flashy chips, maybe, but they're the absolute workhorses. Your display drivers, power management ICs, microcontrollers, Wi-Fi chips. They're in almost everything. The backbone, really.
Okay, so UMC made a big call back in 2017.
They did. They decided to stop investing in anything beyond 12 nanometers. Basically said, we're not chasing TSMC down that rabbit hole. Their focus was going to be on making those mature processes really profitable and stable.
Sounds like a sensible strategy. Find your niche, defend it.
You'd think so, but then the whole landscape shifted. The US-China tech conflict and China's absolutely massive push into semiconductor manufacturing, it just blew up that strategy.
How big of a threat are we talking about here? Like, is this a real wave hitting them?
It's very real. TrendForce data shows China's share of mature process capacity 28 nanometers, and up is set to jump from about 29% in 2023 to maybe 33% by 2027.
Wow.
And some forecasts go even higher, maybe almost half the global capacity by 2030. You've got players like SMEC, Huahong, Nextchip, all expanding like crazy, often with government help.
And SMUC is already bigger than UMC in revenue terms.
Yeah, they overtook them. And look at utilization rates. In Q3 2024, SMUC was running at 90% capacity. UMC was down at 71%. That's a big difference in efficiency and cost absorption.
So this flood of Chinese capacity is driving down prices.
Exactly. It's creating that red ocean effect. Fierce price wars, especially in areas like display drivers, image sensors, power chips, areas where UMC was strong. The margins are just getting squeezed hard.
And we see that in the numbers.
Absolutely. UMC's gross margin peaked around 45% back in 2022. By the end of 2024, it was down near 30%. And the forecasts for early 2025 are even lower, maybe below 30%.
Okay, that's not just a dip, that's a serious slide. It really puts the Intel deal in perspective. It's not just about finding growth, it's finding an escape route.
That's a good way to put it. The core business profitability is genuinely threatened. So the question shifts from how much can UMC win to can UMC even escape this losing game?
Which naturally leads us to the Intel alliance. If the core business is shaky, where else do they go?
Precisely. They need a safe harbor, a defensible spot.
And this Intel deal, it really feels like a marriage of convenience. Both sides seem to need something pretty badly.
Definitely mutual need. For UMC, like we said, they need that blue ocean away from the Chinese price wars. And the 12-nanometer FinFET node looks like a sweet spot.
Why 12 millimeters specifically?
Well, it's advanced enough to offer good performance, but crucially, it's the most advanced node you can do without needing that super expensive EUV equipment, so it balances performance and cost.
Ah, okay.
And here's a key point. 12-millimeter technology is subject to U.S. export controls. That acts like a natural barrier, making it much harder for Chinese competitors to jump in. It builds a protective wall, basically.
Okay, so UMC gets a shot at a protected, higher margin market. What about Intel? They've had their own struggles, right? Falling behind TSMC in manufacturing tech.
Big time. Their CEO, Pat Gelsinger, launched this huge IDM 2.0 strategy trying to rebuild Intel's manufacturing prowess, not just for themselves, but for outside customers, too, through Intel Foundry Services or IFS.
But IFS has been bleeding money, hasn't it?
Oh, yeah. Billions. Around $7 billion lost in 2023. Another $2.5 billion just in the first quarter of 2024. And honestly, they've struggled to win customer trust. They just don't have that track record as a reliable foundry for others.
So UMC needs a safe tech haven and a U.S. base. And Intel needs, well, it needs to learn how to be a foundry and fill up its older factory.
That's the core of it. Intel needs the expertise, the customers, the credibility. UMC needs the tech access and the geography without breaking the bank.
Let's break down the wins. For UMC, what's the biggest gain?
It's that light asset tech upgrade. They get into 12-millimeter development without the insane cost of building a new fab. They're using Intel's existing, already paid-for facilities in Arizona Fab 12, 22, 32. That probably saves them, what, 80% or more of the typical investment? It's smart capital allocation.
Plus, they get a U.S. footprint. That's huge these days with supply chain risks.
Absolutely. Geographic diversification is a major selling point. Clients want options outside Asia, and of course it lets them go head-to-head with TSMC in that 12-millimeter space, try and grab some market share.
Okay, and for Intel, what do they get out of letting UMC use their fabs?
They get a master class. Seriously, UMC has been a pure-play foundry for 40 years. They know how to handle hundreds of different customers. Intel gets to learn that directly. It's like a foundry apprenticeship.
And they get to use those older Arizona lines that might otherwise be underused or outdated.
Exactly. Turn idle assets into revenue generators. Helps the bottom line, helps utilization rates. Plus, adding 12-millimeter fills a big gap in the IFS offering. Right now, they offer really old stuff or cutting-edge stuff, but not much in that important middle ground. This makes them look more like a full-service foundry.
And it's a step towards that big goal of being the #2 foundry globally by 2030.
A concrete step, yeah. But notice the asymmetry here. UMC gets access relatively cheaply. Intel is spending operational money, basically, to gain knowledge and hopefully customers down the line.
So Intel is kind of paying to learn.
And UMC is monetizing its expertise. That sums it up well. Intel provides the buildings, UMC brings the process know-how, the customer relationships, the sales effort. Development starts soon, trial production by 2026, aiming for mass production in 2027.
This dynamic, where UMC is almost teaching Intel,
Yeah.
it leads us to this secret weapon you mentioned, this T-like thing. What is that? We need to understand PDKs first, right? Process design kits.
Right. A PDK isn't a physical thing. Think of it as the instruction manual, the language that connects a chip designer's plan to the foundry's specific factory. It's a set of data files, rules, models, IP blocks that tells the designer exactly how to design their chip so that specific foundry can build it correctly.
Like Lego instructions. The foundry makes the specific bricks. The PDK tells you how they fit together.
That's a great analogy. The designers use the Lego bricks, the process elements, defined in the PDK, without needing to know exactly how Lego makes each brick.
And why does this create lock-in, especially for TSMC?
Because every foundry's process, their Lego bricks, are slightly different, so their PDKs are unique. If you design a chip using TSMC's PDK, you can't just send that design file to Intel and expect it to work. You'd have to redesign large parts of it, which costs a lot of money, tens of millions sometimes, and takes months.
So once you're designing with TSMC, it's really hard and expensive to switch.
Exactly. That PDK lock-in is probably TSMC's single biggest advantage. It keeps customers loyal and makes it incredibly hard for competitors to lure them away.
Okay, now tell me about T-like. What's the goal there?
The goal of T-like T for TSMC, obviously, is to make UMC's process, its design rules, and its PDK so incredibly similar to TSMC's that a customer can switch their design over with minimal effort. Almost no significant difference. A painless transition.
That sounds difficult, like copying someone's secret recipe.
It's extremely difficult. It's not simple copying. You wait for TSMC's chips using that node to come out, you analyze them deeply, figure out how they work, and then you design your own process that achieves the same function but crucially avoids infringing on their patents. It's complex reverse engineering plus clever process design. Takes years of experience.
And UMC is good at this.
Apparently they're among the best. There are quotes from former TSMC and UMC people saying things like, UMC's greatest value is knowing how to do T-like, and we're probably the best in the world at it. It's like their hidden superpower, their crown jewel.
Wow. Okay, so that's what Intel is really buying here. Or renting, maybe.
Exactly. Intel's own PDKs are totally different from TSMC's. If they want to attract those TSMC customers, and they desperately do, just having a factory isn't enough, they need compatibility. This T-like capability from UMC is Intel's potential Trojan horse to get inside TSMC's walled garden.
That really reframes those rumors we heard about Intel possibly acquiring UMC entirely, even if it didn't happen.
Right. The fact that people were even talking about it shows how valuable the market thinks that T-like skill is. You could absolutely see this partnership as Intel doing a try before you buy.
So Intel isn't just getting a tenant for its old fabs. It's hiring UMC as a high-level consultant to learn the most valuable trick in the Foundry playbook, how to break that TSMC ecosystem lock-in.
That's the strategic heart of it, I think. Intel's problem isn't really factories. It's getting the customers who are already tied to TSMC. That makes this partnership way more significant than just filling some empty space in Arizona.
But like any big move, this has risks. It's not a guaranteed win. What are the main dangers here? First off, that China pressure doesn't just disappear, does it? This Intel deal doesn't pay off until 2027.
No, it doesn't solve the immediate problem at all. UMC's core mature business is still vulnerable for the next few years. That's a big risk right there.
And then there's just the execution. Getting two huge companies, different cultures, U.S. giant, the Taiwanese specialist, to work together smoothly on something this complex. That's tough.
Very tough. Cultural clashes are always a risk. And think about the first customer for this 12-millimeter process. That first product has to work and work well. Any major hiccup early on could scare away other potential clients. Confidence is key here.
And UMC itself, they're experts at mature nodes. But 12-millimeter FinFET is a step up. Have they done this before?
They developed their own 14-millimeter FinFET process, but reports suggest it wasn't entirely smooth sailing. So there are legitimate questions about executing an even more advanced node, especially within a partnership structure. Can they deliver on time and on spec?
Then you have Intel's side of the equation. IFS is still losing billions. Intel's going through restructuring, layoffs.
Right. Can they stay committed to this foundry dream long term if it keeps costing so much? Especially now with a new CEO, David Zinsner, taking over from Pat Gelsinger, who really drove this partnership. Will the strategic commitment remain as strong? That's a fair question.
And Intel's track record. Let's be honest, their manufacturing roadmap delays over the years really hurt their credibility. Customers might be wary, even with UMC involved.
That history definitely casts a shadow. And finally, even if everything goes perfectly, there's the market itself. 12-millimeter FinFET is a good market, growing.
But TSMC isn't just going to roll over and let them take share, right?
Not a chance. You have to expect TSMC will fight back, probably with aggressive pricing. So this nice blue ocean USC and Intel are aiming for could turn into another battleground pretty quickly.
So looking at UMC as an investment, it sounds like a double risk. You're betting on the Intel partnership working and the core business surviving the next few years.
That's exactly it. Two big ifs.
Okay, let's look ahead then. Putting UMC's financials under the microscope again, that gross margin falling from 45% down towards maybe below 30%, maybe even 25% predicted for Q1 2025. That's the key indicator.
It's the primary one, yeah. It tells you how much pain the core business is feeling from that Chinese competition. And capacity utilization falling into the 70s also hurts profits.
Although you mentioned their China fabs are doing better.
Yeah, ironically, strong local demand keeps those running at higher rates. But overall, the trend is down. On the plus side, UMC is being careful with spending. CapEx is expected to drop, unlike Intel's massive investments. They're conserving cash.
So thinking about the future, let's paint some scenarios for you, the listener. What could happen? Let's start with the optimistic scenario.
Okay, optimistic. The Intel partnership is a huge success. The T-like 12-millimeter process launches smoothly in 2027. They managed to grab a significant chunk, say 15–20% of TSMC's market in that segment. That new higher margin revenue lifts UMC's overall gross margin back up, maybe towards 35%. Happy days.
All right. What about the base case? More realistic, perhaps.
Base case. The partnership gets going, but maybe there are some delays, some bumps. TSMC fights back hard on price. UMC carves out a smaller niche, maybe 5–10% of the 12-millimeter market. The new revenue helps basically offsetting the continued decline in their older mature process business. So profitability kind of stabilizes, stops the bleeding, but doesn't dramatically recover.
And the downside, the pessimistic scenario.
Pessimistic. This is the double whammy. The Intel partnership runs into serious trouble, execution problems, maybe Intel changes strategy, maybe the cultural fit is just too hard. The 12-millimeter plan gets significantly delayed, or worse, canceled. At the same time, the price war in mature nodes gets even bloodier, pushing UMC's gross margin down below 22%, back to where it was before the pandemic boom. That would be a really tough situation.
Okay, three distinct possibilities. So for you watching this unfold, what are the key things to track? Your personal dashboard metrics.
First, watch UMC's quarterly earnings like a hawk. That gross margin number, is it stabilizing or still falling? And capacity utilization holding steady or dropping more?
And on the partnership itself.
Look for milestones. The biggest one will be news of the first significant customer signing up for that UMC Intel 12mm process. That would be huge validation.
Oh.
Also, keep an eye on Intel's earnings calls and IFS reports. Are those foundry losses shrinking? Is Intel leadership still sounding committed to the UMC deal?
And keep watching the competition.
Absolutely. Any news about Chinese foundries like SMIC getting even more aggressive on pricing for those mature nodes? That directly impacts UMC's core business health in the short term.
So wrapping this up, how should we think about UMC? What's the investment thesis here? It feels like two completely different stories depending on how you look at it.
It really is. The bullish case sees UMC as this clever, undervalued transformation play. They're making a smart, low-cost bet to escape a commoditizing market and jump into a better one, using their unique T-like superpower to unlock TSMC's customers via Intel. If they pull it off, there's potentially big upside in profitability and how the market values the company.
But the bearish case.
The bearish case says UMC is a value trap. The core business is dying a slow death from Chinese competition. They're pinning their hopes on a really risky deal with Intel, who has its own massive problems and shaky track record. There are huge execution hurdles, and the core business might crumble before the Intel plan, if it works at all, can save them.
So, bottom line, UMC today isn't a safe, predictable investment.
Not at all. It's a speculative bet on a major corporate turnaround. High risk, potentially high reward. The current stock price definitely reflects a lot of uncertainty.
So if you're considering investing, you're basically betting the market is wrong, that it's underestimating the chance of the Intel deal working and overestimating the immediate damage from China.
That's the bet you're making. And you need patience, a 3 to 5 year time frame, and you need to be comfortable with significant ups and downs, volatility.
It really is a fascinating situation. It leaves you thinking.
Yeah. How often do you see a major established company make such a massive risky pivot? Not really for explosive growth, but fundamentally just to survive strategically.
What does UMC's gamble really tell us about where the whole semiconductor world is heading? The shifting power dynamics is definitely one to watch.